How low can oil prices go? Crude oil drops below $30 a barrel as the price war between two of the world's biggest producers worsens. How badly will that hurt the global economy, already suffering from the coronavirus pandemic? This is Inside Story. Hello and welcome to the programme. I'm Lauren Taylor. The coronavirus pandemic is triggering fears of a global recession. Businesses around the world are shut, stock markets are suffering massive losses. On top of all that, an oil price war between two of the world's biggest producers. The dispute between Saudi Arabia and Russia has already pushed the price to its lowest in 4 years. Brent crude dropped below $30 a barrel on Monday. Global demand for oil was already low since governments imposed widespread lockdowns and airlines grounded flights because of the disease. The oil cartel, OPEC, and the International Energy Agency both warn that developing countries such as Algeria, Angola and Venezuela could suffer the most, losing up to 85% of their oil and gas revenue this year. Well, the price war started last week when Russia rejected plans by Saudi Arabia to cut oil production. The Kingdom and other OPEC countries want higher oil prices following the drastic drop in demand because of the coronavirus pandemic. Saudi Arabia responded by announcing plans to pump much more oil at hugely discounted prices. Last Monday, Brent crude recorded its biggest one-day price fall since the 1991 Gulf War. The investment firm Goldman Sachs warns prices could fall to $20 a barrel. Both the Saudis and Russians say they can survive the price crash by relying on their foreign reserves of around $500 billion each. But experts say Saudi Arabia needs oil prices at around $82 a barrel to balance its budget. Russia needs around half that. Now let's bring in our panel. Joining us from Bern in Switzerland, Cornelia Meyer, an economist and CEO of Meyer Resource, which is a specialist consultancy on oil and gas. From London, Mamdouh Salameh, an international oil economist and visiting professor of energy economics at ESCP Europe Business School. And from Providence in Rhode Island, Jeff Colgan, associate professor of political science at Brown University. Welcome to you all. Starting off with you, Cornelia Meyer, just take us back to the origins of this. Why is Saudi Arabia doing this?
Well, as you might recall, there was an OPEC meeting, OPEC plus meeting, OPEC plus the 10 allied nations led by Russia on the 6th of March. And Saudi Arabia had pushed very hard. OPEC plus has balanced the market for the last since 2016 pretty accurately, putting on oil when needed, taking off oil when needed. And the Saudis saw how dire the situation was and wanted to take another 1.5 million barrels a day off the market, accumulated with the 2.1 million barrels they had taken before. But the Russians would not play ball, and Saudis said, look, we are not always going, we always take the brunt of it, but we can't do this alone. So what happened is that overnight we came from a situation where OPEC plus was balancing the market to a situation where we had a war for market share between Saudi, Russia, and all sorts of other people. And, you know, combined with the demand was anemic to start with, combined with the disaster of the coronavirus. This is the perfect storm in the oil markets.
Jeff Colgan, do you think we're any closer to any of these sides changing their minds? I mean, coronavirus has happened in the meantime. Could we come back from this, do you think?
Well, this is really a story in 3 stages, right? Because the coronavirus hit on Asian demand came in February. Then we saw the collapse of negotiations in OPEC plus, principally between Saudi Arabia and Russia. But the third part of this story is really what's going to happen to demand for oil in the United States and in Europe over the next few months as coronavirus bites in those markets as well. And so it's possible that we could see oil prices drop even further down into the 20s or even in the teens because we're getting a combination of both a demand shock and a supply shock at the same time.
Professor Mamdouh Salameh, in your view, does Saudi Arabia, what's their kind of the gamble for them is that they can ride this out? Is that a gamble that you think is sensible for them at this stage, and do you think they're going to have to revisit it in the current climate?
It could prove the biggest gamble in their life, and it could bankrupt the Saudi economy. You remember in 2014, the Saudi Arabia followed a strategy of flooding the global oil market with oil in defense of its market share. The policy failed completely and became discredited, and Saudi Arabia was forced to reverse that strategy and to contact Russia, and both of them arranged what became known as the production cuts, which are in effect still operational. Now, this time, Saudi Arabia, things have changed completely between 2014 and now. First, Saudi Arabia cannot flood the global oil market at this time as it did in 2014 because it does not have the capacity to produce the amount it is talking about. And it has to resort to its stored oil. And if she depletes stored oil, then they will be in real serious position in the future.
Yeah. Sorry to interrupt you there. I was just Cornelia Meyer. You looked like you might disagree with the point that Saudi Arabia. Do you think they can actually ride it out? Do you think it's not so much of a gamble?
I mean, look, they're the low-cost producer, and always when you have these epic moments, it's always the lowest-cost producer that can ride it out. But it comes at a humongous cost, and I think what they're producing now, they can produce. But what worries me is when I saw Aramco sort of slashing its capex, its capital expenditure, by about 25%. And let's not forget, Saudi Aramco invests about 12 to 14 billion a year just to maintain production, because when you have declining fields, you need to put capex in there to maintain production at a certain level. Yeah. So I think they can do a lot, but I think it's going to be extremely costly to the country.
Jeff Colgan, what about you? I mean, clearly one of the intentions, I suppose, originally of Russia and Saudi Arabia was to perhaps hurt the US shale industry. What are they feeling at the moment from this?
Well, you're exactly right that the United States oil sector was the principal target of this, regardless of what Russia, Saudi Arabia would say on it. And there's no question there's a lot of pain in the U.S. oil sector. You have Republican senators writing to the King of Saudi Arabia, asking the country to change its course and to intervene in a different way in the oil sector. I don't expect that to be successful, but it's remarkable how, just a few months ago, President Trump was talking about the United States' energy dominance in the global market, and now things are really a different story, and it reveals how President Trump's claim was pretty much an illusion the whole way along.
Professor Salameh, is it your view that that this can continue to go further? What's your kind of estimate of how low the prices could go?
As long as the coronavirus outbreak continues, we cannot guarantee how much the oil price can decline. However, adding or flooding the global oil market, as Saudi Arabia is suggesting, will not help either. However, if you look at it, Russia was absolutely right in rejecting the deepening of the cuts by OPEC+, because its view was that any deepening of the cuts or any new cuts will be oil down the drain. It will have no positive impact on the oil price as long as the coronavirus will continue. Another point, Russia can survive a price war and can live with an oil price of $25 or less for many years, as President Putin has confirmed. However, Saudi Arabia needs a minimum, and I say minimum, price of $85. My research indicates that actually it needs up to $100 a barrel. But the International Monetary Fund yesterday said it needs a minimum of $84. Already Saudi Arabia in 1 month lost almost $75 billion difference of prices between the price of oil in January at 60 and now it is 30. So Saudi Arabia can never win the price war against Russia and can never flood the oil market without depleting its stored oil completely, and it will lead eventually to the bankruptcy of the Saudi economy.
Cornelia Meyer, I just want to kind of go to the kind of the consequences for, because normally in these situations consumers might benefit from low oil prices and so on, but at this time it's very different, isn't it? Because the airline industry has been hit. Explain to us the kind of the impact that this has in a kind of entirely changed world.
Look, we're in unprecedented times, and it is worse than the Great Depression, because at least in the Great Depression, President Roosevelt could throw money at the problem and get people employed. Now, nobody can get employed. Nobody can go to work. As I was waiting to come on with you, Austrian just sent me a note saying that, oh, we're suspending flights from tomorrow through March 28th. So it's starting. It's unprecedented. I'm always very skeptical when people tell me how much the Saudi budget can take in an oil price and how much it can't, because it's very hard to really. I've done a lot of work on the Saudi budget. It's very hard to really extrapolate because we don't have all the data points. But it is clear at this point there are no winners in this. And whether we pump more oil, whether we pump less oil, the oil price will go down. I would not totally discount the shale market going forward when we recuperate. Yes, there will be a lot of bankruptcies, but during the last downturn in 2014, which the professor mentioned, the oil companies, the shale oil space became month on month 2.7% more productivity increase. So they will come back. What you'll see is a lot of bankruptcies, and some of the bigger companies, the Shells, the Exxons, snapping up things for a song. Yep. So I would not discount them when we come back.
Okay, Jeff Colgan, what's your view? I mean, is there any kind of upside for consumers, say, from low oil prices, or from perhaps if China's coming out the other side of the coronavirus epidemic, can it help it restart the engines of growth, or are we still in a completely negative picture here?
Yeah, I think there are some upsides. On balance, I agree that the picture is overall negative, especially because the oil price fall is coming at a time when stock markets around the world were already so vulnerable. But in the medium term, the fact that oil prices have fallen and fuel costs, transportation costs for businesses around the world are falling, that's going to help. So businesses, everything from, say, Amazon delivering packages to your front door, to airlines, to you name it, those businesses are going to benefit from lower oil prices, and particularly if we see, as was suggested, some consolidation in the oil sector in North America. And I expect that there will be quite a bit of movement in the shale sector, and in fact, even in the conventional oil production in North America is probably going to get largely affected as well. But ultimately, it is correct that it's not like the oil sector is going to be completely wiped out here. There will be a rebound over time.
Mamadou Salameh, do you agree with that perspective?
No, I don't agree. For the simple reason, first, a decline in oil prices will not benefit much citizens of the world, since they are quarantined in their homes and they cannot use that benefit. Second, oil prices or gasoline and diesel will not decline by the same rate that the crude oil price declines, because governments would like to keep a huge chunk of tax for themselves. So that's the thing. However, when they're talking about reduce oil prices helping the global economy, even in normal circumstances, low oil prices temporarily help the global economy in reducing manufacturing costs. But long term, the global economy needs higher prices, and I estimate the fair price is $100 to $120, and I'll explain to you why. The global economy is made of three major chunks. The economies of the producing nations, second, the oil industry, global oil industry, and third, investments around the world. These three are, as we have seen in 2014, are very undermined by a weakening of oil prices.
Okay, just let me stop. Sorry, let me stop you there, just to bring in Cornelia. Sorry to interrupt. Cornelia Meyer, I just wanted to ask you, which of the countries are most at risk from low oil prices? Talk us through, I mean, countries like Iraq, or where do you see the biggest hit from this kind of a shock?
Certainly, Iraq is at risk. After it's just come out that, like, smaller countries like Azerbaijan, I don't see how they can weather the storm. The countries that are smaller and with few reserves, FX reserves, and that totally depend for their economies on their oil exports, they are most at risk. But you know, when you look at it in terms of benefiting anybody, how can it benefit anybody in the economy? The question will be, how many airlines will we have left after this?
Jeff Colgan, are you as pessimistic as that? Do you think we'll be left with virtually no airlines?
Well, I mean, in general, all three of us are saying that this is going to be a negative shock for some time. And in fact, the longer that there is a quarantine and a lockdown effect coming from the coronavirus, the harder it is for the benefit of low fuel prices to translate to the wider economy. But it is not all doom and gloom. And I think that the medium-term effects of this are, in fact, real. The question that we haven't talked about yet, I mean, there's two things, really. One is that I think in terms of countries that are hit hardest by this, it's probably those that are in Africa, right? So Nigeria, Algeria, Angola, those countries are heavily dependent in terms of their government revenues on oil prices, and they are going to struggle. So we may see very significant effects in Africa. But the other thing that we need to think about is climate change and how this becomes an important part of the story for the energy transition towards renewables that was already going on. Now we're moving into a world where we could see low oil prices for quite some time, and that's going to affect the investor prospect and enthusiasm for technologies like car batteries and electric cars.
Mamadou Salamé, on that issue of Africa being one of the worst hit areas, what kind of remedies do the governments have there? Because many of them do rely on the revenue from oil to fund their kind of health services and so on, don't they?
First, let me put the emphasis on Africa is part of the global economy. There is one loser in this coronavirus and the escalation of the price war. The main loser is the global economy, as I mentioned. Within the global economy, there are two biggest losers. One is the economy of Saudi Arabia if they continue with the price war, and the second is the U.S. shale oil industry. Naturally, other countries and other producers all lose. So since the loser is the global economy, so everybody loses. There are no winners at all in this.
Jeff Colgan, just want to bring you back in on, I mean, where do you see any kind of potential kind of climb down? Because these are Saudi Arabia and Russia, big powers that don't want to lose face. What would be the scenario where they could say, actually, we've changed our minds and we might adjust our policy on this? Can you imagine a scenario like that?
Yeah, it's going to take some months for that to play out. I think I don't expect to see it anytime in the short term. But probably the brightest prospect, to the extent that it is possible, the brightest prospect is if there is significant movement in the U.S. oil sector, right? So that's been the target from day one. And if we start to see a significant number of either bankruptcies or mergers and acquisitions, and sort of weaker companies being bought up by the stronger ones, that's where we're going to see, okay, Russia and Saudi Arabia might start to see that they've had the impact that they want to have. And only then would they start to consider, okay, is demand starting to rise after the coronavirus shock? So with those two factors in place, rising demand and a consolidation in the U.S. oil sector, then you might start to see Saudi Arabia and Russia come back to the bargaining table and talk again.
Cornelia Meyer, what do you think it'll take to get Russia and Saudi Arabia back to the table?
I think if it gets a lot worse, Russia and Saudi Arabia will come back to the table. I think where Saudi Arabia just put the stick in the ground is they said, we have taken the brunt of all the cuts. We have suffered in terms of market share. We cannot do this alone. And Russia, for its own internal reasons, didn't play ball this time. When it gets too bad and when it hits Russia too hard, they will do it too. I think there's also, let's not forget, there's also the G20. Both Saudi has the presidency of the G20 right now. Russia is in the G20. So we have all the major players in the G20. So something, at some stage, they might get together. And I just have a word of caution on, when they see too much pain in the shale space. You know, when you have consolidation, the bigger players will snap them up and they will be able to use the scope and the scale of the corporation, of an Exxon, a formidable force, of a Shell. So watch that space. When things, rebound, Shell may come back quite significantly, and it would not be the first time that we are surprised by what Shell can do.
OK, Mamadou Salameh, what do you think it will take to have these players resolve their differences and perhaps ease things a bit?
Will the pain which the Saudi economy will suffer will force Saudi Arabia to withdraw its reckless decision to go into price war with Russia and to extend a hand of cooperation with Russia so that they can both, Saudi Arabia as the world's largest exporter and Russia as the world's largest producer of crude oil, to calm the jittery in the global oil market. That is the only way to do it. Furthermore, the U.S. shale oil industry is a sinking ship. In 4 to 9 years, it will be no more. Nobody can keep an unprofitable industry and keep saving it from collapse.
Jeff Colgan, very briefly, who has influence over the Saudi rulers to make them change their minds? Anybody?
Well, I think actually the more interesting story politically is in Russia, right? So Russia is obviously going to suffer with lower oil prices, and Vladimir Putin, his own popularity has dropped considerably in the last couple of years. So it may be the dissatisfaction economically within Russia that puts Russia back onto into the sort of negotiating realm. And then Saudi Arabia, of course, for the reasons already mentioned, is certainly going to be interested in stabilizing oil prices, but I don't see Saudi Arabia being the first to act on that.
Cornelia Meyer, would you agree with that? Is it going to be Russia to blink first?
I would absolutely agree. I would absolutely agree with that. And if you look at so far, Saudi Arabia has taken so much of the brunt of the cuts. So they will want to see some willing on the Russian side. And you're right, there is the tug of war between essentially Rosneft, Igor Sechin, and with big influence on Mr. Putin and the energy minister Alexander Novak. Who is more inside of cooperating with OPEC, and this time Sechin has said we've invested so much in new capacity, we now want to pump. But I think everybody was really taken aback by the coronavirus.
Cornelia Meyer, thank you very much indeed, and thank you to all our guests. So we run out of time, unfortunately. Cornelia Meyer, Mamadou Salameh, and Jeff Colgan, thank you all for your time on the programme. Thank you. And thank you, too, for watching. You can see the programme again anytime by visiting our website, aljazeera.com. And for further discussion, go to our Facebook page. That's facebook.com/AJ Inside Story. And you can also join the conversation on Twitter. Our handle is @AJ Inside Story. From me, Lauren Taylor, and the teams here in London and Doha, bye for now.